Stokes. I'm a retired buy side market participant and I am a CMT. I had my cycle theory that really turned everything around with cycles. And we have a lot of new cycles coming on in the market today. I talked about HFTs last week and their participation in the market and what they do and how they function so that you can understand that. And today we're going to talk about the corporations who are a part of the market. It's not just that they are a public corporation and that you can invest or trade at will any of these major corporations. It is also about the fact that in 2026, there is an exceptionally or empirical huge high of US companies pacing and exceeding $1 trillion in buybacks so far. And that's massive. It's never ever happened before. And the reason is because they have a lot of cash on hand. And so they can manage their stock and make sure that if HFTs gap it down accidentally, they can drive the price back up. So right now, corporations are a major factor of who you are trading against and who you are trading with. So you need to keep that in mind because a lot of you are really set on the assumption that the market's going to crash. And yes, this morning at 3:05, when I get up for my internationals and for my overseas people, I saw that the NASDAQ was down 749 points. So I sent out an alert to everyone so that they would know that there was a potential for a significant gap down in the morning, but that it would likely be a flash crash, which would mean that it would bounce back up. It has, at this time, a gap down, and it's now kind of forming an indecision day candle as we buckle back and forth for MU. MU lost 11.26, and that is massive amount of loss that it took today. But it is a very pricey stock. It's at about $1,000, and it's so when it has a gap down, it's a huge number. So keep that in mind. All these very expensive stocks right now, they're going to have to at some point use splits instead of buybacks. Buybacks and splits pretty much do the same thing. They provide a method of controlling and managing the price and the price action of the stock, their company. So corporations are a major factor in the market right now, and that may be something you're not considering. I want you to be aware of all of the 14 market participant groups so that you understand that it is not Main Street versus Wall Street. It's just not that simple anymore. And when you hear that, you can automatically disregard that person's commentary or video or retail news or for whatever magazines that you follow or whatever you do, because they haven't got the foggiest idea how the market works today. That is very important. We had a nice sideways pattern here. It dipped down, then it pops right up. That tells us that dark pools were back into this. We have some speculative runs. We have some pro traders mix in this. We have a lot of dicey candles, which tells us that that is retail. Is also a lower volume on some of these days. And that can cause some of this little diciness that's going on. So we have small funds managers, and they're very divided. They can't decide which side of the market they should be on. But the stock is trending up and it's trending up and it's trending up. And it's got these little candles that warn you that there's a weakness here and there's definitely a drop in price. Now, dark pools aren't going to buy at this price. Why? Because the fundamentals aren't there. It's over speculated, so that's not them. And they use very narrow, very tight compressed candle patterns. These tight compressed candle patterns, that is the TWAP orders that are firing off. This is all over the place. Look at this. Big gap, big gap, big gap down. It is a nightmare for retail day traders because it's very hard. Professionals do not day trade, and you cannot see the dark pools anywhere. It doesn't matter whether you have level 1, level 2, level 3, level 4 screen. They are invisible. So when you hear this stuff, you have to dismiss it because it is garbage in and garbage out. And garbage out means you are losing money, that you should be making money. So this stock on a weekly chart has an angle of ascent that is too steep to sustain. So what are pro traders going to do? They're going to, if they're still in the stock, they're going to start selling it out and taking their profit and moving on. And today they probably were out before that big gap down because that's what they do. If we look at a monthly scale, we can see it's really over speculated and it needs to come down, because where are the fundamentals for MU? They're right in here. Whenever you see a nice tight compressed pattern that is very controlled, you will know without any doubt that the dark pools are active. You don't need to go in and see the whales, because there's no whales. Those are smaller funds. And the buy side are private companies. They're all private companies, pension funds, and Fidelity, and Vanguard, and so on and so forth. BlackRock and State Street are not buy-side institutions. They are global asset managers. I'll talk about those in another week or two. So this is a dark pool activity, and they control it with time weighted at average price, not volume weighted at average price. So they seldom move price much when they are quietly accumulating, which is their goal. They know the target price that they want, and they are going to buy it. We have a lot of speculation in this stock. So can it come back down? Sure. If we have more scary stuff going on, it could come back down to correct down here. But right now, what's really supporting it is that MU has one of the largest buyback programs underway. So if it starts to slip, it's going to buy it back. And that's why that candle is not a dark pool, and it's not a pro trader. That's a buyback. That's a buyback. So you have to pay attention. This is a buyback. They're trying to keep their stock moving up because everybody wants the stocks to move up. And when the stocks move up speculatively, everybody that's on the retail side, small funds, foreign funds, individual retail investors, retail day traders, retail swing traders, they all say, oh, it's running up, I should buy it. You need to study your charts a whole lot more, and you need to study spatial pattern recognition skills. I'll talk about that next week. You do not have those, and you need them, because this market is changing every day. It is evolving at the fastest pace I have ever seen. And I've been doing market stuff since I was 12. So, yeah, I'm considered a brain trust because I've been around so long, and I see things and I see patterns that other people miss. You need to be aware that this has become a speculative market, and a correction is going to be natural and normal. It does not mean we're going to have a bear market cycle. We're in a baby great bull market, and it's going to last a long time, but there will be corrections, and you need to be aware of that and conscious of that. And you also need to be able to know who is creating these little tiny candles. Well, it isn't the dark pools, and it isn't the pro traders. It's small funds managers driving the price up, and then of course then some of it sells down. You have to be very, very knowledgeable. I haven't talked about the sell-side institutions. I need to talk about them also, because they are in this mix right here. I can tell that the sell side are selling short and making profits on short term by making the market. You can see all these things, and you have to be able to read this like you would read a book or sheet music or whatever you're going to do. Right now, MU is at risk of more of a correction. It might stop here and shift sideways. If it did, that would be good. And if there was more accumulation at that level, that would be even more ideal. But it's already $1,000 and cents stock. So that means it's very pricey for a lot of people. At some point, all of the giant corporations who are doing buybacks are going to have to go, maybe it would be better for me to split my stock. That's about the same thing. But the buybacks create a fervor of speculation which cannot sustain. The stock splits provide the opportunity for more people to afford to buy that company. The stock split is a better value for investors and traders, but oftentimes the corporations are fixated on keeping the price going up and up and up and their market cap, when they should be considering other things. So we will start to see some splits at some point, because at some point these buybacks are going to come and smack them in the face, and then there's going to be a correction and they won't be able to hold it up. There's only so much money that they can pour into a stock at any given time and do that. So we have buybacks going on, and mostly what I see is buybacks. There's sometimes a surge of volume. It's also buybacks because when I look at my market condition analysis scans, they're showing weak momentum to the upside a lot of the time. Sometimes they're showing strong momentum to the upside, but over the past several weeks, there's a lot of weakness in there, and that is not a good thing. So study your charts, learn spatial pattern recognition skills so that when you look at a chart, you're looking at more than just right now. That's not enough. Or a few days ago. That's not enough. Or a week ago. That's not enough. You have to be able to say, oh, where are the fundamentals? Oh, they're right here. Easy peasy to see. And that's what I'm trying to teach you. I'm Martha Stokes, and that's my topic for the day.